Hello and welcome to Super Return Asia. I'm Sarah Clark in Hong Kong and I'm joined by Weichou Su, Partner and Head of Asia for StepStone Group. Thank you for joining us.
Thank you.
I want to start on the key issue of how to approach this region, the Asia Pacific region, and the limited partner or LP perspectives. How do you view the Asia Pacific private equity landscape?
I view it very positively. I think globally, institutions outside Asia generally view this as a very important location for more capital flow from an LP perspective. So you can really measure this on a number of fronts. First of all, it's sheer size and growth, and this is where the growth is. So Asia is today 40% of the global GDP, 50% of the global GDP growth, 60% of the global population, and within 10 years' time, 70% of the global middle class. So it's a place you cannot afford to miss. So in that sense, Asia is very important.
So how should LPs approach the Asia Pacific region, and where are the growth markets?
So LPs, if you sit outside Asia, Asia looks very distant and could be challenging, particularly if you have really very little kind of knowledge base or very limited resources. So generally, I think people go through a sort of a knowledge curve, right? So they start by backing one or two managers and names that they know, they've invested in the US or Europe. Usually these organizations have a branch in Asia. But as they move the sort of the knowledge curve, move up the curve, they get more comfortable, they go to the next level, they can back a country fund or a specialist fund. And that's usually the approach.
So what are LP's latest investment strategies, and what's China's role in the portfolio, in their portfolios?
So China is very important. I think everybody would agree with that. Again, by its sheer size, right? China probably accounts for easily 50% of the private equity market and venture even more here in Asia. So from that perspective, Asia is important. China is important. Growth and that's China is by far kind of the fastest growing economy for a long time, and that generates a lot of opportunities. It's complex. It's more mature. It has depth. When you talk about venture, the full ecosystem of angels, A, B, C round investors, growth capital, buyout, and strategic buyers, and the IPO or trade sale path. This is very, very mature in that sense, more so than most other places in Asia when you talk about venture. And also, China has delivered the returns. Right? Probably is the place that has delivered the best return for folks who've invested in Asia as an LP. So from every perspective, China is very important.
So what are the opportunities then under the new normal for China's outbound markets?
That is probably a different picture. So very different from what I've talked about overall about China or about Asia. Just a few years ago, I think if you talk with a global entrepreneur or venture capital or private equity partner, China is very important on a number of fronts. First of all, Chinese companies were becoming very acquisitive, so they could be buyers of your companies. And China or Asia private equity firms are also very acquisitive. So you two can really collaborate at the, if you are both kind of fund managers, collaborate at the portfolio company level in terms of transactions. All right, so that was very active for a while. But then in the last 2 or 3 years, I think we really hit a low point because of two main reasons. One, the capital control that the Chinese government have put on kind of capital outflow, meaning it's much more difficult to convert local currency into US dollars or foreign currency. So that's a big damper. I think the second reason is really this backlash, particularly in the US, but also in some sense in Europe, against this wave of Chinese acquisitions. I think because of these two reasons, of course, the talk about the trade war does not help. I think for all these reasons, I think now we're really at a low point. I think this probably will continue in the near future.
So what are the strategies then that can best capitalize on China's emerging opportunities?
I think the same as in other emerging Asian markets. Asia have really sizable, large funds, more so than any other countries, right? $2 billion, $3 billion, even $10 billion funds, country-focused funds we're talking about. And I was just saying China's kind of mature, more, there's a lot of depths. For instance, buyout has increasingly become an investment strategy for a lot of GPs, whereas it was not so just a few years ago. Venture, as I said, very mature. There's still a lot of capital going into venture in China. And because as the market matures, you're beginning to see the emergence of a lot of sector specialists in sectors such as healthcare, technology, consumer, even education. Right? So you're beginning to see a lot of those. That certainly presents a great investment opportunity.
Okay, wrapping up, looking at the sector in general, can different approaches be combined, and how might an LP change their approach as they familiarise themselves with the market?
Can different strategies be combined? I think certainly you can. I would argue that you have to, you must. I think at two levels. One, as I said, as you move up the kind of knowledge curve, in order to drive return, I think you should not just focus on the big names, the big funds, right? You should be able to go one level or two levels down to really build your own relationship, to really support and back the real winners, right? These may be lesser known, but they are great managers, right? They're tested. They may not have the resources to market themselves overseas, because their platform is relatively small. But so these are kind of usually sometimes below the radar. You need to spend the time. You need really to make the trips to understand that. I think that's kind of one aspect of kind of the strategy shift from one end to the other, so that you cover the entire spectrum. I think the other strategy, talking about combining kind of different strategies, is what I see from many LPs, is to combine co-investment and secondary, right, in order to drive up returns and mitigate J-curve. That is proven outside Asia, but now I think in Asia, but particularly in a place like China, has increasingly become a strategy that I've seen from a lot of people. That's not easy to do, but I think you can still. There are many ways you can do it. You can easily do it through a separately managed account. Kind of rely if you don't have a local team.
Okay, thank you very much, Weichou Su, for joining us.
Sure, thank you.
Thank you for joining us too, and you can find out more about Super Return and find out more about issues like these if you find us on Twitter. Look for #SRAsia. Thank you for joining us.